Let's talk about the big elephant in the room. The stock market took a big hit this weekend, a correction, a crash, if you want to call it that. And yeah, we all woke up and saw our portfolio significantly lower than what it was just a few days ago. Now, obviously, no one likes to see the portfolio down, but please keep in mind that this is all part of the cycle, whether it's the stock market, the crypto market, real estate. There are cycles, and these cycles are healthy. They're part of investing. There's ups and there's downs. Now, if you take a step back and you look at the grand scheme of things, we've had some significant appreciation in the stock market, crypto markets, real estate, and it's all right. It's going to be all right. If you're in your 20s, 30s, 40s, even 50s, time is on your side. There are many of us that wish we got into certain stocks, mutual funds, when they were at lower prices. Well, this is your opportunity. Are we done falling? I don't know. No one knows, right? But if you continue to dollar cost average and invest for the long term, you're going to be all right. Long-term investing should always be part of your strategy. Now, there are, if you're fixing and flipping, if you're calling options, puts, whatever the case may be, obviously the strategy is much different. But long-term investors, this shouldn't affect you. The question is, how does this affect real estate? And no one knows. Now, what we did see over the weekend is mortgage rates drop about a quarter. I was saying since late last year, beginning of this year, I never believed there was going to be a Fed cut this year. I thought if there was going to be, it'd be a quarter. Now I'm pretty sure I'm going to be wrong there. Well, simply being the fact that the Fed doesn't want too much blood on their hands. They don't want to cause too much pain to the economy, and I think they're going to pivot sooner than later. I think don't be surprised if in the next meeting, instead of a quarter cut, they may cut 0.5 basis points. I think that's a real possibility now, considering where we're at, right? Considering unemployment, considering consumer debt continuing to pile up. Now, so with that being said, I do think mortgage rates are going to trickle down. Now, how many buyers are going to be entering the market with rates falling? Where inventory is still an issue. I do think if rates get in the low fives, God forbid a 4, I do think you will see more buyers enter the market. I think there's opportunities in every market. Whether you're a buyer or a seller, I think there's opportunities in every market. And if you are a seller now, it is very important that you are pricing your home accordingly well, that you are marketing, right? It's not like how it was during the pandemic. You put a sign up, you got to market the property. You got to make sure the home shows well, right? So I think if you are a seller, you have to make sure that you are not taking shortcuts and listing your home. If you are a buyer, continue to study your market, and there's opportunities. There's going to be opportunities. Now, again, I don't think we'll see a buyer frenzy unless we see a 4. I think we see a 4.9. Again, there are buyers out there right now. However, how many buyers are going to be coming into the market? I think what a 4.9, 4.8 may do, which I'm hoping occurs, is that there are going to be more sellers that are coming off the fence. Right now, keep in mind, if you have a 2.7, 2.8, 3, 3.5, 4, it's just, you're not going to be quick to give up that rate, right? Essentially, if you're in the 3s, it's free money. You're lower than the inflation rate. You're sitting in a good seat, and most likely that mortgage payment is going to be less, depending on the market, than what the rent is in some cases, right? Again, if you're in the 3s. So I think if we get down to the 4.8s, 4.9s, I think we are going to see more sellers enter the market. However, I do think there's still enough buyers out there that are going to swamp the inventory that's going to come in our market. I'm speaking solely for the Northern Virginia market. Now, what I do as well see is a refinance boom awaiting. I think when interest rates continue to trickle in the forwards, I think you're going to see more refinances. I think people are going to tap into their equity, whether they're tapping their equity with a cash out refinance, a home equity loan, a HELOC. I think you're going to see a refinance boom. I just think it's inevitable, right? That's a way to access that equity. You're going to see more people tapping into their equity to potentially pay off some debt. So I think rates do need to trickle down. I think they're going to trickle down. I think we need them to start coming down. For a very long time, I was saying be careful what you wish for. I do think now with the situation that we're in with the stock market, with unemployment, with the uncertainty, right? There's also there's a lot of global politics that are in play right now. So I think a Fed cut is inevitable at this point. Now, how does this impact real estate? No one truly knows. But what you do got to appreciate about real estate that I think goes underappreciated is that it does not move like the stock market. Things take time. You're not going to wake up tomorrow and your house be half off, right? 50% less than what it is the day prior. That's not how real estate works. Real estate takes time. There's indicators. You can look at certain key factors that can let you know where it's going. From mortgage applications, you can look at days on market. How long is the house taking to sell? Are there price reductions? Are there seller concessions? Right? We can call agents and see how much interest they're getting. Right? You can walk into an open house and see how much traction is happening. Right? There's we can study the market. Things take time. And again, that's very underappreciated in real estate. It takes time. Your house is not going to lose value, 50% value tomorrow. It just does not work like that. But all in all, obviously, no one likes to see their portfolio down, but dollar cost average is going to be all right. We pullbacks are healthy. They're part of the economy. It's an opportunity for you to get in, to buy. Again, are we done falling? No one knows, right? But if you dollar cost average, if you invest in the long term, whether it's crypto, whether it's the stock market, whether it's real estate, long term should always be the game plan. But yep, I believe in America. I believe that we'll bounce back. And if you believe in America, it's gonna be all right. All right, we will bounce back. And that's it. That's it. Hey guys, happy Monday. Let's get after it, right? There's opportunities in every market, and yeah, this is another one. So be ready. More is coming. Peace.